Hey traders, welcome to Charts and Coffee. Happy Tuesday, everybody. We've got a busy week ahead of us in terms of the economic calendar. We got a glimpse of that yesterday with the ISM PMI. It's a lot of alphabet soup that we're going to be dealing with, but bottom line is it lands more in the inflation category of what's happening right now. And we're going to continue to monitor each and every one of the 7.2 million FOMC speaking events this week. Let's go ahead and take a look at the economic calendar because it truly does have to be seen to be believed. When we take a look at what's going on with the calendar yesterday, you can see the ISM PMI. Today, we've got jolts at 10 a.m. And this is now just 4 days. On Friday, we've got non-farm payrolls. We get the job openings information. Then we hear from Bowman, not but 10 minutes later, which is going to be an interesting juxtaposition of getting this major piece of data. Because remember, the Federal Reserve has two mandates. So before they hike rates, before they cut rates, they're always looking at two things: what's happening in the employment picture and what's happening in terms of inflation. So we're getting probably the second most important employment data that we typically get. So there comes Bowman, followed by Williams, Meester, and Daly. And that's all before 1:30. So we have a lot to deal with this morning in terms of reaction once we get past the clearing range, which is simply the first 30 minutes of the morning. All right, moving on to Wednesday, ADP, ISM services, more FOMC speak. Then we move on to unemployment claims on Thursday, more FOMC speak. And then Friday, of course, with the big jobs number. And what would a day be without more FOMC speak? So we've got a lot going on. And, is it time to duck and cover, right? Is it time to parry? We're going to have the market throwing a lot of punches our way. They are risk events, but they're also potentially opportunities. So the opportunities are going to come, though, in a more volatile environment. So it's going to come at a different cost. The cost is risk. The cost is if we get into a trade overnight, the pre-market data comes out poorly, or sentiment, or one of the FOMC members land in a way that the bulls, the buyers don't like, we're going to be dealing with some more volatility, especially for overnight exposure. For intraday exposure, if you're a day trader, let's say you're happily day trading futures in the morning before the bell. The bell and the clearing range can present its own volatility. And then all of a sudden we get a 10 o'clock hot zone, or we get an FOMC member. So it doesn't matter if you're an overnight trader or a day trader, the road's going to be a little bumpy. So then you might ask, Rog, what's the best way to deal with it? There's a couple ways to deal with it. Either we take predetermined measured risk, smaller size, and a predetermined stop loss. So we know where we're wrong before we have any kind of catastrophic trade, right? Or really damage to our account that is outsized for the potential reward that we could get. All right, so then the next thing we can do is shorten the time frame, but be really aware of those hot zones. I'm going to opt for swing trading. I'm going to opt for the latter. I'm going to opt for taking risk overnight, because if I think about a daily candle or even a 1 hour candle as a shock absorber, you ever see those Baja trucks going over the dunes and they're just flying along at what seems to be 100 miles an hour, and the tires are just accommodating for all the bumps? That's what I mean by shock absorption. We're going to be dealing with some speed here, but we need the travel in our suspension. And the way to absorb that is a lot of times a longer term time frame. And because what could be dramatic on a 5 minute for 20 minutes is just a little blip on a daily time frame. So I'm going to opt for the daily most of the time this week. And that's what's been working the most. So when folks ask, okay, Rog, we're going into Q2. What's new? What are you going to do differently? Not a darn thing. For the most part, I cannot in any way, other than the FOMC speakers and just this sort of dilly-dally with the eventual rate cuts. Other than that, macroeconomically, we've got a clear path. from the seasonal. We've got, again, election cycle. We've got a pretty clear path, and we've got a clear path in terms of most of the trends. And it's just really the constant FOMC uncertainty about when they're going to actually cut June or July that's adding to volatility that really doesn't need to be, but we can capitalize on it, right? And that's what we're going to continue to do. And again, daily timeframes, swing trading, overnight, dealing with the 0 days to options expiration volatility, dealing with the algorithms, dealing with retail traders now involved in a completely different size and in a completely different way. I mean, I'm a retail trader, right? We're empowered with data we never really had before. We're powered with calculating power that we've never had before. And it just continues to be more and more a force, which I love, right? I mean, a lot of people look at GameStop and go, to me, I looked at that as the harbinger of really the impact of retail traders for probably forever from here on out. So pretty exciting times. And that's the way I'm going to be managing what's going on. And by the way, if you haven't already, you've probably got an email. And if you haven't already, you're gonna. I've got a webinar coming up, actually just a day from now. We're going to be getting together at 8 p.m. New York time, East Coast time. And we're going to be talking about the way in which Q1, what worked in Q1, what could I have done better in Q1? And also, what am I doing this year that I really have never done in my career before? What are the tools that are guiding me into really what is not just next gen tools, but next gen markets? And what is it that we're dealing with? And why do we have to adapt? What do we have to adapt to? And how, most importantly, am I adapting? So this is just a little glimpse of, I haven't finished taking all my statements from my brokerage account to upload into TradesViz. This is a little taste of what we're doing. I'm going to talk about good days and bad days, mostly good days. We're going to talk about account growth and what are the tools that are allowing me to chip away at this market. All right. So as always, the best part of our show are your questions. You can register for the webinar at toptierprosystem.com. That's tomorrow at 8. All right. So let's get to it. Can I explain the GE split and how it affects open option positions? Here's what I'm going to look at in terms of the company split. I'm not going to know the full ramification of what GE is doing. And frankly, nobody does. Plenty of folks will speculate. But for traders, let's think about this. There are 4 factors in the market. We'll be talking about those tomorrow. Price, volume, volatility, time. Of those factors, can I grab levels of support and resistance and make decisions about whatever I may know, the company splitting up, and not know all the ramifications of the split up? Let's presume there's a lot that we're never going to know about the market. And that's okay. Because as long as we're measuring price, volume, volatility, and time, we can see what the response is and we can react to even information that we may not actually be aware of. I mean, that's a reality for us, gang. We're never going to know all the things that are impacting it. So with that being said, what am I going to do? I'm going to go back to my tools and say, all right, what does my multi-structure say about GE? My multi-structure says we have not just bullish trend, we have bullish momentum. We have both of these bullish. If I take a look at my candles, these are color coded to help me understand what's happening, again, under the surface. Under the surface is where the impact of algos, 0 days to expiration options, the different size that moves in and out of the market, that's where that's being measured. So I look under the surface, I've got green candles. So there's really nothing for me to do but focus on the long side for the most part. Now, there's a couple ways we can do that, JP. I've chosen to do that a couple different ways. We've played GE in the Sector Secrets Mastery. We've also played XLI. So I'd keep an eye on that one as well. All right. Let's see. Anthony says, last night I found 3 stocks, Coin, Low, and DHI, which are in a trend. Now, so by the way, as I'm reading Anthony's comment, for those of you that are reading it too and listening, these are all based on the top tier tools. These are tools, again, that are measuring what's going on under the surface, right? The color coding is what makes it easy. I'm not a complex carbohydrate. I don't want to get into the complications of calculations. That's why I have my system do it. The beautiful thing is the output is simple. So when he's talking about Coin, Low, and DHI, Anthony, they're in a trend. So we have bullish multi-structure, we have bullish momentum, pull back to the daily price movement range. So that is the volatility tool that I use that has been decoding, look, I haven't been getting a lot of mean reversions, and I've heard the same from a lot of folks. Rog, we're not seeing consistent visits to things like a 34 bar mean reversion or even a 21. I used a 34, but even more aggressive ones. We're just not seeing that constant, if not sort of beautiful stair stepping off mean reversions. What is the market stair stepping off of? Because there's got to be support somewhere. Where that is at volatility. You can see coins doing that really well. Good eye, Anthony. Good stuff. Yeah, good stuff. And we'll talk a lot more about this for those of you wondering. I understood half of what Anthony just said, but clearly he's finding some good trades. What is he using to find them? That's the top tier pro system and daily price movement ranges. Yep, Lowe's is as well. So Anthony, what's the next step we have to do on coin low DHI? Beautiful looking charts. Now we need the open interest, right, my friend? So I'll see you in the room in a little bit. We'll see if there's any opportunity to be had. But remember also, we've got this week ahead of us. So the fourth factor, again, price, volume, volatility, time, that fourth factor is going to be a big one this week because of the different events that are happening and that we don't necessarily want to be pre-positioned in front of all of them. Right? We don't want to necessarily be pre-positioned in front of Powell or non-farm. Some of the other ones, we could pre-position and take advantage of the volatility. Shock absorber being the key here. Can we absorb the shock of these different events? But ultimately, those are the two that I'm most concerned about. Jolt would probably be third. So today's Jolt is going to be a big one, and then we'll see what we can deal with. All right. So let's see here. If the market goes down, will I buy XLE if XLE pulls back? So I want to look at crude oil. So let's look at the top tier here. Again, what are all the factors that are changing? We're seeing a lot of things in crude oil that suggest that crude oil is going to keep going higher, right? So all the factors in crude oil are telling me bullish trend, bullish momentum. Look at the consistency of the green candles since the 8th of February, right? All the aspects of the market that are changing by way of the factors that we have to deal with now that we didn't even have to deal with, say, 3 years ago, are telling me specifically on the 8th, it's time to focus on the long side, right? Once we get above the 200, which happened at about $78 a barrel, now it's definitely long or nothing. So yeah, we're going to focus on the long side of crude. Now, what kind of coattails crude? XLE, XOP, OIH. This is going to put Exxon, Schlumberger, Chevron. Well, Chevron's meh. Exxon, Schlumberger, Marathon. There's a number of stocks that look fantastic in the XLE. So if we can pull back to the daily price movement range, so it's not that it goes down, Java. It's not that it just goes down. Is it, again, showing me the structure that I need to capitalize on it? And then are we getting a support level? And again, take a look. Mean reversions, whether that be 34 bar or 21, have just not been in play as often as we needed to have a pipeline full of trades. That DPMR will keep the pipeline full, and that's what I need. So that's what I'll wait for the pullback too. All right. What's the difference between open interest and volume? So, Rand, this is the way I usually think about it in my head. Open interest is the full number of contracts in that strike, in that month, right? What's the full number of contracts that have been that are out there, and what of those are being bought and sold? That's volume. So volume is existing in the world of open interest. That's the way that I look at that. So we have the total number of contracts, and then of those contracts, how are they being bought and sold? And by the way, open interest when it comes to options is far more important to me than volume, because remember, volume is cumulative. Every day we start off with zero, right? Every session. So volume is cumulative. It's always going to be low. The open interest is steady, right? It's steadier. The contracts that were open yesterday, we should have a certain number of contracts that are carrying over to the next day and the next day and the next day. So that's the way I would keep an eye on that. All right, next up is, let's see, what's my take on Bank of America and Chase? Sure. So this would take us over to XLF. And on my cards on the table, we do have a Bank of America open positions. We have a BAC position. We've been in and out of JP Morgan a number of times because this particular corner of the S&P and the Dow has been very strong. And we're also in that window where we have the potential rally into earnings possibility. And I won't even call it a possibility. It's really a wind at the back of this uptrend. So when I take a look at what's happening in JP Morgan, this is kind of going back to what Java was asking about. Would I buy it on a dip? And the answer is yes. I would definitely put this on a list of buying on a dip. Same thing goes with Bank of America. Same thing goes with Wells. So there's a lot in that group. It's not just about those two stocks, although I like those very much. So great question. Let's take a look at XLF. This is the totality of it. So now what I'm doing is I'm taking a look at all the top 11 names, the weighting of XLF, looking at the top 11 names, and pretty much everything. Oh, you know what? Wells, I might be careful for. Visa's a no, right? Goldman has been a no and continues to be a no. Chubb would be a no. So take a look at what I would focus on. JP Morgan, Bank of America, American Express, Citi. So we can take this big group and say, look, if we can take advantage of the tide, which I would think is fine, that's XLF. I look at the structure of what we're dealing with, the green-gray candles. And by the way, you're going to hear me refer to gray candles from here on out. Green, red, and yellow. The green, red, and yellow candles are the ones that take into account all the different things that are impacting the market right now. That 0 days to options expiration, algos, size moving in and out of the market in ways that it hasn't before. So this is the structure that looks at all the newer, frankly, very impactful aspects of what we're dealing with. So when I talk about a gray candle, it's the evolution of the grab, by the way. So green, red, and yellow. So now when I say there's a green gray candle, yeah, it's gonna be fun. Naming things is not my thing, right? But testing things, making sure they work is definitely my thing. And these are absolutely going to be buy the dip opportunities in financials. I have no question about that. The structure is there. Let's play the probability, right? Let's play that probability. All right, next up, actually, while we're looking at, here we go. While we're looking at this, let's go back to the layout and bear with me. Let's go take a look at the way our indices are behaving, because we've been doing that previous session close and sentiment read during Charts and Coffee. So let's do that together here. All right, so let's start with the, well, I have an open position in the Dow. So let's start with that Dow. All right. Now, these are things that you've likely always done with me, which is focus on the structure, find the support, what's the path of least resistance, right? So what we're doing now is we're using something that's better suited, more powerful in this current environment, right? And not just this current environment, for years to come. Because again, the different catalysts for movement now, they're not going anywhere. You know, I don't see any reduction of algorithmic volume in the market. I don't see any reduction of participation, 0 days to options expiration. In fact, I'll be surprised if we don't have more of it as we continue. And retail trading impact is here to stay. I mean, and I love that. I love that. That's definitely something, especially the retail aspect of it, which I'm very excited about. I love when retail traders empower themselves to take advantage of this. But we have to take advantage of it with the right tools. We have to take advantage of it with our eyes wide open. So when I take a look at the Dow here, I'm not pleased with what I'm seeing. We're below the previous session close. We're heading down to perhaps a mean reversion. I'd like to see better support here. But really, if we're going to get a feel for the morning, let's look at it two ways as we wrap up our session here. One, where are we in relation to the previous session close? Clearly, when I look at the Dow futures, we're below them. But two, where are we after 10 a.m.? That's going to be much, much more telling. So where are we after the jolts? And then even 10:10, when I believe Bowman, FOMC speaker Bowman, is going to be saying whatever wisdom she has for us. So here we have, again, some weakness on YM. Let's take a look at the Russell. Another index I have exposure to, a little bit of weakness in the Russell. So we'll manage this as we go forward. I love days where we can do two things. Practice the discipline of making sure we don't blow up our accounts. And two, in that process, look for more opportunities to keep our pipeline full of chances to build on what has been a really nice uptrend from Q1. Let's see how much Q2 wants to take the baton and run with it. All right, gang, as always, thank you so much for being here. which for me, with me for charts and coffee. And I will see you all tomorrow. Same time, same station. Be good to each other.